how much you made this year?
In the stock portfolio, it did go up by over $1 million.
You came at the worst time in economical history.
Recession was there in full swing.
We are in the midst of a serious financial crisis.
And there were no actual jobs back then, so we were just doing anything we could. I have delivered flyers for 7 cents.
Oh, wow.
It was winter, snow every day, work for 2 hours, 3 hours, bring home $20, $30 for the whole day.
So you literally lived the average immigrant life.
My first job was right when I was turning 18. I used to work the night shift, so I'll start the day at 11 o'clock at night and then finish by 7 a.m., go to my high school at 8 o'clock, come home at 4, sleep, and then repeat the whole cycle.
Where is that drive come from?
When you're born in like a middle-class family and you hear no a lot of times, your mindset becomes this, okay, I want to have a lot of money one day.
So you really lost money.
I already seen my portfolio go down from $300,000 to $96,000. A couple of them went bankrupt.
You're not scared now.
It's all in the mindset, I think.
What are you earning for if you're not enjoying the life?
For me, earning is all about time. What's the point of having all the money if you don't have the time?
If you're someone working full time, don't know how to get out of the rat race, and really want a path, a clear path, and how you can get out of that and have really like a financial freedom. Because this guy have made it happen, coming from, completely zero money background to working full time, and in less than 8 years, quitting that full-time job, now making approximately 7-figure income every year by doing nothing. So Ratan bhai, you came to Canada in 2008.
Right.
And how old are you at that time?
I was just a month away from 18, so almost 18.
So, we all know what happened in 2008.
Yeah.
And you came at the worst time in economical history.
Right.
Take us back to your, journey at that time, your emotions,
Right.
or your family, what made you to, you or your family to come here.
Right. So it wasn't my decision, my family's decision. So good thing my dad applied to come to Canada. I think that was the best decision ever in the family. So I was just excited to be in Canada as any other kid, right? So back in the days, it was really tough to come to Canada, not as easy as nowadays. So I was just a child at that time, just 17-year-old, never left my town back in the days, just went to school. So it was a big change for me. But then we had family here, close relatives that helped a lot. And that I'm really appreciate them for the early days they helped our family to get settled in. So now recession was there in full swing. US was the worst one, but Canada was still suffering, not as bad as the US, but there were not many jobs. So within the first month, all of us, my mom, dad, brother, myself, so all of us started working. My first job was right when I was turning 18. And there were no actual jobs back then, so we were just doing anything we could. I have delivered flyers for 7 cents a flyer.
Oh, wow.
That was one of the very first jobs. So 7 cents we used to get for every flyer we would deliver. And it was winter, snow every day. Sometimes we'll get work for 2 hours, 3 hours, bring home $20, $30 for the whole day, just walk for hours, right? Just go from one door to another door, just leave a flyer in the door. There was a pizza shop. He gave some work. Instead of giving 7 cents a flyer, he gave us $7 an hour. So 3-4 hours, he will just pick us up from one location, take us to one area. Okay, in this area, just drop all the flyers. And then eventually things started getting better. Got a job at a gas station. Again, $8 or $9 an hour, and then slowly went up. But I never really cared about how much we were getting. Always gave our 100%, just like how we were taught back in India, right? Just work hard. Something will happen. I always had about going from 2010 onwards, when I finished my high school, I would have like $2,000 in the account, and then that would go down by the end of the year. That's the most I've seen in my account, $2,000 to $2,500. And then when I got a job at the gas station, I was in my grade 11 or 12. I did my high school here. So I used to work the night shift sometimes. So I'll start the day at 11 o'clock at night and then finish by 7 a.m., change my clothes, take the bus at 7 o'clock, go to my high school at 8 o'clock, go to the high school for the whole day, finish my school at 3 o'clock, come home at 4, sleep, and then repeat the whole cycle.
So you literally lived the average immigrant life.
Right, back in the days, right? Yeah.
So your parents did not come with any education background, or like what was their?
They did, but there was no money in the family. So, like when you come to a country, so they were also 55 plus, so in the 50s. So they had the choice whether to upgrade their skills or just work for the family. So they had to work in the end. So they were taking care of the house expenses. Me and my brother were just paying for ourselves and also the education that we were going to take in the coming years. He was already in the college. I was going to start my education. And one of the funniest things I remember is like I applied for all the colleges, all the universities in Canada, or at least in Ontario. And I had no idea how I was going to get the money. Because it was $10,000 for the tuition for 1 year. Let's say $5,000 for the travel expenses and all. And I chose to live on campus, which was $8,000. So first year I signed up for $18,000 expenses. 2 months away, I have no idea where the money is coming from. My family is telling me, don't go to a university, we don't have money. And then I'm telling, I'll find out, I'll figure it out. And then luckily, very nice, we were in the basement at that time. So very nice landlord owners, their son came down, helped me. He's like, okay, there's a loan available in Canada. It's called OSAP. You can apply for that. You'll get a lot of money, or most of the money from there, even the loan, some grants. And I think I always had some luck that just worked out somehow. But I think it's also the harder you work, the luckier you get, right? So, but then there's also other helpful people around you that make it happen.
So you were in that, hardworking crunches, because many of us, I went through the same phase, working, hustling just for living expenses,
Right.
or for education expenses. So, where is this drive come from? Because you from there to a full-time job and a good job,
Right.
and now you even quit that one,
Right.
got into stocks.
Yeah.
Where is that drive come from?
So I think it's just a mindset, right? So like when you don't have a lot of money, you have to work harder than other people to afford some of the things. Let's say I'm born into a rich family. I don't have to work hard to get anything I want. But when you're born in like a middle class family that doesn't have a lot of savings, and you hear no a lot of times, can I have this? No, you cannot have this. We don't have money. Your mindset becomes this: okay, I want to have a lot of money one day. So I never have to listen to someone saying no. Right? So that's what drives in the end. And that's never going to go away from me. Right? So it's stuck in my mind. And
you remember any instances that were like really pinch you badly? Like
nothing specifically, but it just, like seeing other people around me have everything, but not myself. That always makes you sad at that time.
Because I always remember, when I go back and think about my childhood,
Right.
I wanted a bicycle very badly.
Yeah.
I've been asking from my 3rd grade or 4th grade, and till my 10th grade, I never got it, and I finally never got it. So that's when I told myself, you know what? One day I'm going to become rich and I'll buy whatever I want
Exactly.
to buy.
Right. But when you get to that point where you can buy everything you want, your mindset is such that you don't end up buying anything. You're just still in the mindset, okay, there's no value of buying this one today. It's just one time. It's going to make you happy one time, but it's not going to do anything after. So now that I'm able to buy anything I want, I'm very selective in what I'm buying versus what I'm not buying. And
Why is that? Like, what do you mean by selective? Why is that?
It'll be what I get out of it, right?
Yeah.
So I'll give you an example. So one thing I have made myself not think about where I'm going to spend is vacations. That was a recent change, like last few years. So we decided we're going to take, me and my wife, we're going to take a vacation every year. And on the vacation, we won't worry about any expenses. Just spend anything you want. No questions asked. No. Even in my mind, I'm not gonna even think about it for a second. And we ended up. Well, first one was like a very simple one, Mexico and all. We recently went to Portugal for 2 weeks. Amazing. And now we're gonna keep doing the same thing every year. It'll be one for now. Hopefully, it gets to 2 vacations, 3 vacations a year. But I'm at least getting memories from those. Versus buying something expensive like clothes and all, which I'll wear once, and the next time I don't have anything to remember for the rest of my life.
So you're not a fan of Lululemon or any brands?
No
like
brands. Anything that looks good, I buy. There's no logos, no brands I care about.
And before we started recording, you said like your maximum spending on the clothes was that. What was that?
My jeans are like $30 budget. So generally I spend like 30 to 35 max. And that's been the same since I came to Canada. I remember when I bought my very first pair of jeans in Canada, it was $20 from Zellers. So that's the store that closed years ago.
Yeah.
And then with inflation, I only went from 20 to 30. I tell my wife something like, maybe I should go to 50. Right? So, but yeah, generally my expense is very, very limited. Anytime you won't see me wearing more than $100, except my watch, which I changed recently.
It's a passion, something that you feel to it.
That's my second watch. So I got a watch 10 years ago for $100, and then that one broke. So I had to get a new one, and then I went out of the budget, which I don't know why I did it, but it's just did one time.
Because that's really interesting. Like, so I see this common with many people who are like, who made their 7 figures or saved up their 7 figures,
Right.
and invested that 7 figures. They have this common traits.
Right.
One is like, they know what is valuable, where you need to invest your money or time versus where you should avoid.
Right.
Do you think that is like one of the biggest obstacle that's stopping many average or below average, families or people? Have you noticed any traits like that, within your circle, your friends, or, who wants that kind of, freedom?
Yep.
But the biggest obstacle is their habits.
Yep. 100%. I think me and you will relate to this one. So we rarely find someone that has the mindset that we have. It's very hard to find people like us. 90% of the people we meet don't have this mindset. They just see something, they like it, they want to buy it right away.
Yeah.
They don't have the delayed gratitude that wait until you earn it, earn enough that you should afford it. Even, for example, birthday parties. I'm not a fan of birthday parties. My birthday was 3 days ago. We didn't do anything. I just don't feel like I'm celebrating anything. Like, what am I celebrating on my birthday? Right? There has to be something I must have done amazing to celebrate. But I know I see people, my friends, go out, spend thousands of dollars on birthdays. And on my birthday, literally, I was just sitting at home. I told my wife, I want this specific dish. That's all I need, nothing else. And we brought it home, just enjoyed.
Then there is like, myth around families. Like, even my own parents says, what are you earning for? Why are you earning if you're not enjoying the life?
So for me, earning is all about time. So if let's say I met someone very recently, it was my friend's wedding. So I met a lot of my friends from back in the days, McMaster, right? So the salaries they told me, so one person's making almost $326,000 a year in USD. The other one's making close to 300,000 USD.
Wow.
Same education, right? So working in California. So it's nice meeting all of them. But then they told me they work 70 to 80 hours a week.
70, 80 hours a week.
Yeah, they work for Teslas, Amazons, as mechanical engineers, right? So they make them work for it. I'm like, what's the point of having all the money if you don't have the time to enjoy the money? You can buy all the things you want, but you don't have the freedom. You only get 2 weeks off a year. And then for me, it's all about time. If I have free time to spend with my family on my own goals, learning new skills, vacations, travel, that's what I like the money for. And then when I pass away, I want to make sure my kids have money. They should not have to suffer or go through financial hardships in the future.
You said some quotation before we started the recording. Can you repeat that related to this sense?
I think I kind of forgot. There were two. One was about compounding, and then
the other one about your favorite singer.
Right. So one of my favorite singers, Satinder Sartaaj. So I recently saw his reel somewhere. So what he's saying, you haven't ever met a happy person. All you have met are successful people. They look like rich people with the money, and they look happy. But in actual, when you meet the happy people, you realize the money doesn't matter. Like whatever you buy, it doesn't matter. You're happy internally. So it's really deep. I really liked it.
Yeah, it makes a lot of sense because especially those who personally understand themselves better.
Right.
Getting back to your story, when did you came across this idea of retiring, like having a financial freedom?
Right.
And when did you got into stocks? What's your, continue on your journey?
So it's my job. So very, again, luck, right? So I'm always surrounded by some good people. It doesn't matter where I go, just like you and I are sitting right now.
Yeah.
So it just happens. So very first month at Ford, the company I started working for, there was this person, he was in his 50s. Very nice person to work with. He was the one training me. And then, of course, when you learn from someone, you end up talking personal stuff as well. So I I picked up a few things from him. One was invest 10% of your income every month. And he was doing 15 actually. So he's like, minimum 10, if you can go, do 15% of your monthly income into your retirement. So when you stop working, you have enough. You don't need to worry about money. And that's what he did from day one. So that was one thing I picked up from him. The other one, when I asked him, when do you want to retire? He's like, when I hit 30 years. And he was at, I think, 23, 24 that time. So he's like, when would you want to retire? I was like, max 10 years. I cannot go more than 10 years. And that was just like my initial reaction to it.
So just came out of your intuition.
Right. But luckily that worked out. And then the other reason why I got into stocks, it was not like a made up answer, like I wanted to retire in 10 years. It just happened. It just, my words came out and it just somehow worked out.
The universe played in your favor.
Right, somehow. and then the stocks part, I blame my company for that too. The company, right? When I got hired, they said, okay, we'll give you 5% income every month. All you have to do is add 5% of yours. We'll match 5%, and we'll give you 3% more on top of it. So, but then they said, okay, all these are funds. These are all the funds here. Now pick something from these and tell us which fund you want us to put the money into. And funds are all money related. I had no idea about investing. Well, I had some clue. I didn't really know a lot about it. So I was like, okay, give me a week. I'm gonna do my research on it and get back to you which funds to give you. So I spent my time, learned everything about it, what companies they're buying and how everything works. And then I picked a few, and then I started monitoring them every week, every day, basically, sometimes to see, okay, they're going up 1%, now down 2%, 1%. And then by the end of the year, I realized, okay, I'm up about 15%, but my overall money in there is very low. It's like $10,000. So 15% means nothing. It's only $1,500. Then I was like, okay, what if I add more money? My entire paycheck in there, it's going to get bigger. So I was like, okay, 15% of $100,000 is $15,000. If I get 15% of $300,000, is almost $45,000, right? So I started doing the math. Okay, what if I get it to $1 million one day? That's $150,000. I'm making more than my job. Right? So I just started running these crazy scenarios in my mind and on calculators. And I started basically throwing my entire paychecks in there. I was living by myself. My expenses were nothing, like $600.
So how old were you at this time?
25, 26.
25, and people have a lot of expenses.
Well, I was just sharing an apartment with my roommate. So it was $400 USD. I lived in the US. So $400 a month for rent, maybe $250 for groceries, $10 for gym. And then what else is left? Like dining out, maybe $100 a month max. So that was all my expense, and everything else was savings.
So you're literally like what, 70% savings?
70, yeah, exactly, yeah.
And what was your salary at that time?
I think starting would be around 70,000 USD when I first got the job. When I left, it was like 125 to 130 USD.
So how long you were there at that company?
7-8 years.
7-8 years. So this whole 7-8 years, so many dynamics has changed in your life,
Exactly.
right? Like, you got married.
Yep.
And you got kids during that time?
Yep. Well, yeah, exactly. Around that time.
So how did you manage to continuously save 70%? Because, many people watching this would say, bro, this guy is bluffing. 70%.
I actually have, my spreadsheets for every single year. Like I track my expenses. I just type in, okay, where am I spending all my money? Just to see where I'm overspending. I have a budget. Like, okay, I'll spend, like in my mind, I spend this much a month on, let's say, eating out or restaurants, vacations and all. At the year end, I see, okay, how much did I overspend by? And then see what should I do next year to make sure I don't spend into the wrong categories. I want to keep spending in the right categories to learn new stuff, but not in the wrong categories, which are just a waste of money. So I have these spreadsheets from like 2019, 20, 21, 2, 3, 4, 5, all years. And it also helps with the taxes, right? So when the taxes comes, I have to file for my business taxes. It's all there. So they just show me what I'm doing in my life, like spending in the right amounts or right areas or not. I used to do it very regularly back in the days, but now I don't have a lot of free time. So I just did it in December for the whole year and just do it one time. But then I know the income part. So it was easy to save when I was single. When I got married, I think that first year, we bought a house, like a non-investment property house.
Yeah.
So investments are better.
Yeah.
So non-investment property, personal home. So expenses went up, furnitures, everything. Almost, I think I still saved something, but very, like almost nothing. That was the first time. And I was actually shocked. I was like very scared. Like, what did I do? I've never seen myself not save anything. And then that one year, I just saved almost nothing. So then I said, okay, I need to come up with a new way of making more money. Right. So that's where I started working. And I looked around which business I can do. and financial sector made the most sense. That's where I was going myself anyway. And then my dad was also an insurance investment agent. So I talked to him and then got to know what that area is like. And then I thought, okay, I'll give it a shot.
So you started a side hustle.
Right, exactly, to make up for the 80%.
The difference. So,
Yeah,
so because you were not on track with your goal for savings.
Right. So I wanted to make sure I have more income coming in so I can, because expenses went up and there's only so much you can cut from expenses.
Yeah.
Then you have to work on your income after. So I wanted to make my income go up. And eventually the income like went up to my salary, went even double. And then I was like, okay, this is a limit. I need to stop. I need to quit my
you're
job.
doing financial advising.
Right. So estate planning, insurances, life insurances, investments for clients. So instead of just helping myself, I started building wealth for the people and also protecting their wealth.
So you're also learning in that area.
Exactly. Right.
Because you're pretty much investing in stocks. So by this time, back to you started focusing on savings, you know, from your colleague, you picked up that savings part. But when did you actually started investing in stocks or like any funds?
So funds I was investing in from the very first time, like first year, 2016 onwards, right? As soon as I got hired.
That's through the company or you're doing myself?
Through the company, right? And then 2017, a year after, I started investing in stocks. But then I didn't know what I was doing. I was just buying, listening to someone, okay, buy this stock, buy that stock. It's just like how everyone starts.
So you're like just blindly buying.
Exactly. And then some worked out, some didn't work out. And then 2020 COVID crash happened. Everything went down 30, 40, 50%. But my thing was I was always a long-term investor. I was not trading. So even though they went down, I was not scared. But then 2022 came, they went down even more.
Yeah.
And then that's when I realized the worst, like how bad of companies I had picked in my portfolio. Some were really bad. Some were, like a couple of them went bankrupt.
Oh.
And then that's when I realized I need to change my whole strategy and then start learning about the companies, not just buy and then like see someone buy something and then just buy it. So actually learn about the company, what they're doing, all the expenses, business balance sheets, income statements, just go through all those and then buy the right company in the right industry, not just any company you think of. And then my stocks didn't really go up a lot until I changed my strategy. So I was always making money here and there, overall losing money until 2022. And then after that, the shift happened and the accounts just took off.
For almost like what, 4, 5, 6, 4 years,
I think,
you did not really made returns.
Right. I made in the first year, lost in the second year, made in the third year, lost in the next year. Right.
So it was not consistent.
It was not. I could not. Yeah. And it was not like something I was doing to make extra money. I was trying to win in the long run, to make my net worth go up in the long run. And the same thing now, I don't really buy, or I rarely sell stocks. I mostly buy them. And I don't really do stocks for my active income. I'm buying them and holding them for my net worth increases.
So probably, you know, including me, those who are watching, they might be wondering, probably what you're referring to is like long-term investments versus like day trading.
Exactly. Right.
So what's the difference between both?
Right. So generally when someone starts, they think of stock market as making some daily gains or monthly gains. And that's called trading. If you're going short term with the idea that, okay, you want to make some quick money, that's trading. It could be day trading, could be weekly, monthly, even less than 1 year, still trading. You want to keep it short term. Investing is truly investing in a business. Let's say you're buying a property. You're not buying, you can do it two ways. You can buy a property to flip it.
Yeah.
That's trading.
Fix and flip.
Right. And then you can buy a property to buy and hold. That's investing. Because you understand the math behind it. Okay, how much am I buying it for? What's the valuation? How much do I have to renovate on this? And then what's the rent going to be like? And what's the appreciation I get? Right. That's all investing. Same thing in stock market. You're understanding the company, what industry they're in, who are the competitors, how are they growing versus their competitors, what are their income statements like, how much cash they have, how long can they last without profitability, right? So you do all the calculations where you can use AI, but then yourself as well, to come up with the idea, okay, do I really want to be a part of this business or not? Because now you're actually owning a company in the end.
Gotcha.
You become a shareholder, and that's investing.
So have you ever done trading?
In the initial days, right? So sometimes I had bought stocks, for example, cannabis stocks, right? So 2018, the cannabis year, Trudeau legalized cannabis back then, I think. So stocks would go up like 40, 50% a day. And I thought, like, this is it. I made it. And then I saw 2020 went down. That was like, okay, that was the bad idea. Right? But yeah, those I would buy some stocks in the morning and in the evening they're up 50%.
And you're selling them?
Yeah, back in the days, I would sell them.
So for who should be picking this day trading versus, like, because there's a lot of debate, and especially young people, because I see you when you started, you were young, you're in your 20s, and when I did also, like, for me, I have no clue till the day about investing. I only go for long term because I know few companies. Just take some AI help and understand the company a little bit, but there are a lot of people who are leaning towards day trading. And what kind of red flags do you see, or who should not be doing day trading?
So day trading, in my opinion, it works really well when it's a bull market, right? For example, bull market means like the stocks are going up inconsistently. So since 2022 market dropped, I think end of 2022, the market, if you look at the S&P indexes or NASDAQs, the market has overall consistently gone up. It has had drops like April, but it works in those. You can buy any, like majority of the good companies and then sell them a few days later, a month later. It generally works out. But then when a bad time comes, if you don't want that money to be stuck in there, you don't want to be trading.
So that means if you're depending on that money for your day-to-day living.
Right. Let's say someone has plans to buy a house next year. You should not be trading or investing at all. We don't know when the market is going to go down. April market went down, but it recovered quickly. So whoever was day trading at that time, they must have had felt like almost 30, 40, 50% drops within a few weeks. I think trading should be something who has had enough, for those people who have had enough experience in the market, they have seen the volatility. Like if I want to start trading, I think it could be something I should do, but I still don't want to do it. It's a lot of headache. It takes up a lot of your time and energy. You're watching the screens all day. Like I told you before, I literally have one monitor and that's all I need for my stocks. I don't need like 10 different monitors to study charts. When does this chart going to go up tomorrow or not? They never work out in the long term. It only works out when the market is stable. When things start to go down, everything goes down. Right? If you think about Warren Buffett, he never traded. When he's the richest person ever from stock market. No other person made it to his levels, right? And he never traded in his life. He always understood the businesses and bought those businesses for the long run.
So what's the main key ingredient here? Like when did you saw a big gain that rolled your confidence? I have to learn more.
So in 2022, when the market was down, I had this book. I had this book before too. I read it before when I was in like 2018 or 19 when I started doing it. It's called One Up on Wall Street.
One Up on Wall Street.
Yes, written by Peter Lynch. Peter Lynch is one of the most recognized, famous mutual fund investor. I guess not even investors, managers. He only did it for 13 years. Did it for Fidelity. During those 13 years, his annual average for the fund was 29%.
Wow.
For 13 years in a row, that's the annual average. No one has ever beaten him in a mutual fund game like that. And he retired after 13 years. He's like, I'm not doing anything else. I'm done. I'm only managing my accounts. I want to have time for family, travel. So I don't want to keep working for companies, even though companies wanted him to by paying a lot of money. And he wrote a few books. One Up on Wall Street, really good. If you like this one, then go to the next one, which is called How to Beat the Market.
How to Beat the Market.
Right. So just 2 books. The other one's like a second part of the first version, like an updated version with time. But both are amazing. I've read the first one almost 3-4 times. Anytime I feel like I'm losing my mind in the markets, like I'm not sure what I'm doing, I just go back and read the book. It clears my doubts.
So these are like the basics of like foundation, laying the foundation.
Exactly. If you want to learn about stock market, that's the very first book I think everyone should read. And then the other one, One Up, How to Beat the Market. They will teach you, like it's written like anyone can understand, like someone in grade 7, grade 8, they can also understand. It's simple English, no complications.
So it's not the terms that some jargons that you use.
Right. You won't get bored. You actually like it.
Okay.
Yeah. So that book I had read before, but then 2022 market dropped. I was like, I need to do something again. So I went back to the books again and then changed my strategies to follow what he was doing rather than just buying any company I wanted to. And then biggest win didn't really come like in a day. I had bought Palantir in 2021 without knowing what it was at $24. Yeah, $24 price. And then 2022, when everything was down, I was very selective what I should buy because I already seen my portfolio go down from $300,000 to $96,000. So that was almost a drop over like 70-80%, the whole portfolio. But I'm still calm. I told my wife, she was obviously shocked.
Damn.
Right.
So you lost like literally 70-80% of
Right.
your...
So it's only loss on paper.
Yeah.
But I think actual loss was $100,000 plus because some companies went bankrupt from that portfolio.
Oh, so you really lost money.
Like 100,000 plus, right? Yeah. And then, but I didn't really get bothered because I had two incomes.
Okay.
So I was making money
So
from
maybe that's the key, right? Like having a...
consistent income.
Yeah.
Right. So even though 100,000 was lost, I was like, that's just my side money for the year. So I didn't really feel bad. It's all in the mindset, I think. If you have a big stomach, as in like you can tolerate big jumps, volatile markets, you're able to take some losses. Obviously, I learned by taking losses. And I think the best way to learn is by learning from other, like have a mentor. If you know someone who's doing well, learn from them and their mistakes rather than making your own mistakes and then learning them. I went the wrong way. I don't know anyone who was doing good in the stock market.
So who
personally.
is your mentor?
No one still. So
The book you mentioned.
well,
Probably.
that's my only book. Yeah.
So that's the guy you consider him as your mentor?
I guess in a way, his philosophy is what I follow still. And then I watched a lot of Warren Buffett's past interviews, to make up, like, even though I was not investing in 2016, 17, when I started early in the days, I used to go to the gym, I remember, just listen to his interviews, like even older interviews, just to like learn how he built his wealth and how he thinks, right? So, and obviously mistakes are part of the game. You will always make mistakes. You will always lose money. It's just that you have to make sure you're, like, as long as a couple of big winners are there, you will do well in the end. So Palantir was the first one, and I bought it at 24 before I knew about it, what I was doing, and then I bought it all the way down to 7 when I learned what the future can look like for them.
Oh, so
Same-
you're even though when they're going down, you're buying in.
Right, exactly. The only mistake I made in 2022 is I was so scared after seeing the drop in my portfolio. I didn't really trust myself that I will be able to make it, that I bought in small quantities.
Oh,
I had the money.
You had money.
I had money, but I was scared enough to see my drop that I did not go all in. I bought Robinhood at $7, $10, $15 range, Palantir, Coinbase at 30, which is now 300 plus. Palantir is now 190. Robinhood is now 140,
so
150.
you
right?
could have made a lot more.
Exactly. And I bought Tesla at 100, which is 450. So I just pretty much like made sure I'm buying like in the minimum amounts, like TFSA Max, RESP, well, which was later, TFSA Max, a little bit RRSP. But then luckily 2025 dropped, which came in April. I went all in. So this time, and even 2022 to 2025, I was buying consistently. And then as the portfolio grew, my confidence came back up, grew.
So when the markets dropped, you're not scared now.
Right.
Because you went through that cycle.
Right.
You know that someday it will come up.
Exactly. As long as you have the right companies, you know why you bought the company. Like I was telling you about the other company, right? We shouldn't name it here. So someone buys and loses money. But just because I have conviction why I'm buying this company, if you know, let's say you bought a house, like you bought 10 properties in Windsor, and you know why Windsor is going to win in the long run. You believe in that. And then tomorrow somehow economy crashes and the properties
for
go down
example,
40%.
today, right? Like right now.
Yeah.
Right now, we are in that stage.
Exactly. But you know the future is not going to be like it is today, and this market is not going to go bankrupt. You're going to be a winner.
Yeah.
Right. So same thing with the companies. If you know you bought these 10 companies and why you bought them, and then doesn't matter if the market is down now, that's not reflective of what they're doing today for tomorrow, and tomorrow they will win. You will end up getting.
So what are some of the metrics that you look in a company to make that decision?
So one is, first of all, you have to understand where the company is in the industry. So you can't buy a company in, for example, cannabis. The industry is not going anywhere, right? So, I mean, obviously I could be wrong, but at least I would not go buy in cannabis right now. So buy in a company that's growing and going to be in demand in the future, which is AI, for example. So people who saw AI as future, like let's say 3-4 years ago, are doing really well right now. So you have to know where the company stands in that market and how the company is growing in relation to the other companies that they are in the market, and how the company is different from the other companies. You can't buy just the same company that's doing something else, right? You have to find out the winner. For example, NVIDIA. There's a lot of companies making chips, but NVIDIA is making the best chips. So whoever realized this part maybe 10 years ago has made the most money than the person who realized a month ago. Right? So you have to be early and then have obviously it could be wrong. We could be wrong. The company may not make it, and then also don't over-invest. Invest what you're comfortable putting into the market and losing as well at a point. And a really famous line that Warren Buffett said one time. He's like, imagine you're buying a company today in the stock market, and then imagine the market closed for the next 5 years. Just put the money that you're comfortable not touching for the next 5 years. And that actually happened in 1930s. The market went down so much that they had to shut the market down for a good 6 months.
Oh, wow.
They did not open the market at all. And so imagine stock market being closed for 6 months.
So you have to be prepared. Whatever the money you're putting into this market,
Yep.
you're not touching it.
Exactly.
And that's where the key is.
Exactly. And you have to buy the right, hopefully you bought the right companies. And imagine someone buying Amazon 20 years ago. They made the most money, right? You have to hold it.
So you should have that eye to picking the company that has a vision to grow in next
Exactly.
5-10 years,
Yeah.
but also have a right driving factors.
Yep. And also watch them every quarter. I listen to earnings calls whenever they happen. So every quarter they have earning calls. I listen to them just to make sure what they did in the last quarter versus what their plans are for the next quarter. The question answer session is the most important that I really like because they also issue statements. They also issue their shareholder letters, but that's all prepared marks. But when the investors ask questions to them directly, sometimes they end up giving like the way they answer questions and some information they give lets you know what's coming ahead for them, even though they don't want to say it too much at that time. So earnings calls are important, shareholder letters, any other presentations they do, all those are a factor that you have to keep up with the company. You don't want to keep holding a company if, let's say, they don't go in the right direction. Imagine Tesla. So I have a big position in Tesla. Let's say Tesla, the reason I have it, not just because of cars, every company is making cars.
Yeah.
I have it because of the FSD, the full self-driving. Then I have it even more conviction because of the robots that they're coming up with to replace the labor. Then energy is there. Then there's AI is there, right? They're doing multiple things. It's like one company with like multiple companies inside. So I have the conviction in them becoming a big company in the future. But then let's say tomorrow, Elon Musk says, we're not going to make the robots anymore. I'm out of the company. Right? That's my reason to be in the company.
Gotcha.
So if the reason changes, don't hold the company.
So you gotta understand the company better.
Right.
What all they're doing, what is the future that holds for what they're doing.
Exactly.
You mentioned a couple of times AI.
Yep.
How are you integrating that to really get informed on these areas? Like, do you use AI to make your stock investing better?
Yep. Every day. So I don't tell AI to pick stocks for me. I know a lot of people do.
So you're not saying, give me top 10 companies like I do.
No, nothing like that. So I just, I usually find out about stocks, let's say on social media platforms, and I like a ticker. Let's say some people are talking about it. Okay, let's look into this one now. And I try not to look at the market cap of the company, like what they're valued today. I think that's one of the things Warren Buffett had taught me from his interviews. Never look at the company's market cap, like how much they're valued today, until you go through the whole data and then come up with your own valuation. Okay, I think the company should be worth this many $1 billion, and then see how much is it worth right now. If it is well over, maybe it's overvalued, and then if it's well under, and you're saying it should be worth this much, then maybe you're getting a better deal. So that's the way he usually does it. He does look at the business incomes, statements, other balance sheets, everything else. But the first thing I would do is scan, like Twitter threads, just see what other people are posting about the company. And then if you like the initial part, the sector they're in, whatever you can find from there, then take it to the next level, start listening to the earnings calls, the past ones, their shareholder letters, they have a lot of information. And then that's where I use AI after. So I use Grok, Gemini, and ChatGPT, all three of them.
All three of them.
Right. Yeah, exactly.
Which one you would pick if I have to ask you to pick one?
Pick one for stocks. I like Grok the most. Grok, yes, that's Twitter or X nowadays. So they have their own AI LLM. The reason I like it is it picks up a lot of information from people are posting. So you end up getting a lot of real numbers, like most recent numbers compared to ChatGPT. They end up showing like older numbers.
So what kind of questions you're asking the AI about the company?
Right. So I'll give you most recent example of a company I bought, Nebius. I bought this company around $60 a share. And then right now it's about 130-ish, 130-140 a share. So I came across this company, I think through Twitter actually. I just saw this not even a lot of people were talking about it, but I just saw this one and I got interested. Okay, I already had NVIDIA. I already had AMD, which makes chips. And then the next constraint, if you think of AI, like when you listen to one company's earnings call, they talk about like what's happening in the whole industry. So that's another reason to listen to those.
So is it like a public?
Yeah. Available. Anyone can listen.
Oh.
Yeah. They announce they happen every 4 months. You can listen to them live, or you can also listen to them recorded.
So they're published.
Yeah.
On the company websites.
Right. So all you do is type the company's name, Robinhood, for example, let's say, or NVIDIA, let's say NVIDIA Investor Relations. You will find the link there, and then you will find every single earnings call if you want to. I usually listen to like the last one or two if I'm buying a new position today. And then they also have slides prepared for the investors to show like how the metrics were. There's also more things like 10K, 10Q, which are like almost like 70 to 100 pages long sheets. Warren Buffett goes through those. A lot of people go through those like one at like every page. They identify what the risks are in the company. Because let's say if I'm presenting my company to you, I'm only going to show you the positive things. I'm not going to tell you the negative things.
Correct.
But the SEC, which is the main regulatory body for all the companies that are public, they make them also file 10K, 10Q. 10K is like an annual form. 10Q is quarterly. And those have to highlight every single thing possible. Negative risks. What are they doing? What could be the factor for them to go bankrupt? Right. So, but there's like 100-page long sheet. So sometimes what I do is I use those, upload them into Grok, summarize them. Give me the negative parts. What are they talking about? Right. So instead of me like it's better to read all of it.
Yeah.
But sometimes I use AI just to go through them all. Like ask. Like it all depends on what questions you're asking. If you're asking like simple questions, give me 10 stocks. Not right.
True. So you're talking to a complete newbie.
Right.
I want to learn about a company.
Right.
Give me the specific questions you ask to AI.
So first thing I would do is the investor relations, right? So go through those, understand as much as you can yourself. And then now you can ask, okay, give me the competitors of these companies. What are the competitors, right? So you can start with those. Okay, now show me how much revenue is my company bringing in, the new one I'm looking at, versus the competition. And how are they growing every quarter or every year? Like let's say the revenue is $100 million this quarter for my company. What's the revenue for the next company? And how much did they grow that one by? And then how much is their market cap versus mine? Like you can also do these offline, but I just use AI. And then how are these companies different from one another? What's the mode it's called? Like what's something unique this company is doing versus the other ones, right? And then what are the guidelines? The companies also give guidelines for the future for next year or sometime a couple of years after too. What are the guidelines given by my company versus the other competitions? And how and then is my company profitable or not? And then when are they expecting to show profits? You don't want to have a company that's going to keep losing money forever. You want them to make profit one day, right? When they're not making profit, the valuation is not a lot. But once they make profit and they make profit consistently, their valuation becomes a lot more. So example of Palantir, when I got into them, they were losing money, and then they slowly made money. So the stock went up a lot. And then once they made money for a few quarters, like consistently, and they were growing really well, they got added to S&P 500. Right. So I bought at 7. And then by the time they got to S&P 500, they were almost like $80 or $90 stock.
Oh, wow. So 10x.
Right. And then at that time, every time someone's buying funds, mutual funds or ETFs, everything, they're buying Palantir at 90. I bought it at 7. Now, let's say someone like XYZ, they're saying, okay, I want to buy $500 of ETF every month. And the ETF is buying Palantir at 70.
True.
Right.
Yeah.
But I'm already done years ago.
The interesting point here, you mentioned, a couple of companies here. And Palantir, when you picked up, it was negative or not making money. But what are the metrics that picked your interest to pick that stock? So
one is the AI theme. So overall, the AI was going to be a big one in the future, right? So that's one industry I wanted to be in. And then the next one is what is something unique they're doing? So if you listen to the earnings call, their CEO is really nice, amazing. Is a different personality than we're used to. So what he openly says is there's no other company in the whole world that is doing what we are doing at the moment.
What is that?
They're collecting, let's say, I'll give you an example of Wendy's. So it's not just I listen to the CEO, we have to listen to other companies, the customers they're using. So Wendy's is a big customer. They signed up a couple of years ago. So every year they run like AIP cons, they say. All the customers show up and then present what they did with the AI with Palantir's technology. So Palantir is just a platform. They build softwares that are specific to each company. And the way what they do is they collect all the data. So let's say now you're working on learning about AI. So a lot of companies, they want structured data in specific format. I want this label here, this label here, this label, right? So they can use it. But then Palantir always says, okay, give us any data you have. We will come up with something useful for you from that. So Wendy's, the CEO said they had a team of, I believe, 15 people. Every day they had to call nonstop to all the franchisees in all over US, Canada, to ask, what are you missing tomorrow or the day after tomorrow? What items you need? And then doesn't matter what they would end up coming up with, it's going to be wrong. So imagine 15 people working for a full day nonstop, and then tomorrow they know it's wrong. And then they said, Palantir went to them. They said, okay, we can, the way they do it is very interesting too. They say, okay, spend a week with us, no cost. We will come to your office. You bring your best engineers working on AI, non-AI, all the software engineers. Give us your data on your company's laptops. We will run the software and show you what this does. And then if you like it, then you buy it. No company does that. They offer you, they tell you, this is not going to work. You have to do data in this way. And then they sell you something that they think is a solution, not from the company side. So when Wendy's was approached by Palantir, they spent a week on it. And then what 15 people were doing daily, now the software does it in 2 minutes.
Wow.
It runs through all the metrics they have, every single data point they have in the company, and tells them, if you don't ship this item by now, tomorrow this franchise is not going to have milk or ice cream machines running tomorrow. Do you want me to proceed with the order? Yes.
Damn. So they're increasing the company's productivity by
using data, raw data. And not just this company, Boeing uses them. Like big companies in the world are using them to enhance to come up with things they didn't even know they were missing in the supply chain.
And you saw all these things when not many people saw it.
Exactly. Right.
How do you find these companies? Like, so one, now by understanding, by talking to you, I understand that you do a deep research on any company. But where do you find them?
So the initial one comes from Twitter most of the time. So Twitter. Yeah. So Twitter, I'm always on Twitter just to see what other people posting. So follow similar ideas. I only follow Twitter for stocks.
And you follow any specific people? Or
I have like 400 people I'm following.
400
so something
people
shows up randomly, right?
Who are all these 400 people? Like just
like me, random people posting.
So who are heavily investing and
if
researching.
I am buying Palantir, then there's people buying Palantir, I follow them. Or talking about Palantir. If I'm buying Robinhood, they're talking about Robinhood, I buy them. Coinbase, I follow them, right? But I don't just follow someone with like low followers. I want to make sure they have at least like thousands of followers. So it doesn't look like it's credible, a little bit credible, right? And I don't really take their word when they say buy this stock. Never listen to that, because I've done that in 2020. I bought a few stocks from YouTube and all, lost money. So never do that.
What was the worst loss you ever?
So I had Beyond Meat company, which I lost $60,000 on in one stock.
Beyond Meat.
Right. And then I had TTCF, lost 40,000. Then I had Namaste. It was a cannabis company, lost 10,000 on it, right? So these were all the stocks I was buying by listening to people.
So you never did any research?
No research, no income statement, nothing. Right. So it's just the idea, okay, looks good, buy it. Now I just do my own, like I will listen to what people are saying, what they're talking about, like multiple resources, YouTube, Twitter, Threads is more for recent one, what people are talking about and why they are interested in this one, and then my own conclusion why I am interested in this one. Then I have a really close friend now, me and him, we talk, and I think we went to the same school together, but then we kind of got drifted away. There's, like when you move away, you don't have the same connection left anymore. Yeah. But then investing brought us back together. Now we're on the phone every day.
Yeah,
talking about stocks. So you need some friends like that they're aligned, like are similar to your mindset. Yeah. About stocks, so that then we can help conversations. Okay, look into this video. We're gonna watch this today. Tomorrow we talk about this one. What your thoughts are, what my thoughts are.
So you're building a network here. Right. And I see your content. One of the main reason why I wanted you badly in the podcast, your this year whole earnings, how much you made this year?
So in the stock portfolio, it did go up by over $1 million.
By over $1 million just this year.
Stocks only, right? But I don't really sell those, so it's not like
like you did not make. But technically, you made your money. Like
right, exactly.
So which is like you started with what?
So my very first stock I bought was like $1,000. That's 2016.
But before you started your this year, because in that I saw like
I see, right.
your starting investment amount and your returns.
Right. So my balance as of last year in the account, stock account, was like $800,000. And as of now, it's like it did cross 2 million this year for the very first time.
Damn. So you crossed 2 million. But so, there's a lot of things to uncover here. But the most pressing question for me, especially because getting towards the one who are working full time.
Right.
So when did you quit your job? What kind of portfolio you had?
At that time, my portfolio would be right between 800,000, well, close to, it did go up above $800,000 before that too. But
So you
obviously
did not
it drops,
hit
right?
7-figure at
No,
this
no,
point.
no. It was not for my stock portfolio. It was more of what my other side business was doing, because I had already replaced and doubled my actual income.
Gotcha.
Right,
So
so-
you did not quit because of your stock
No.
portfolio.
Yeah, because my stocks is not my active income. I don't treat stocks as something I want to sell and use. I treat them as
Gotcha.
my net worth increases, right? So in the beginning years, I used to look at what I'm making every year. I want to make sure I make more. As of last 3 years, I think my focus has shifted not to just keep making active income, but to have my net worth increase more.
Damn, that's an interesting
So-
ideology.
And I track my net worth every year. I don't really track how much more I'm making this year actively. So I have a chart which calculates how much, like even from 2008, or no, well, 2016, since I started working full time. So how much I was not making, how much my net worth was from that year and every year. And this year net worth is up 56%. So I don't even know my active income. So 56% net worth increase. Last year was 37%. The year before was 90%.
So you're tracking your net worth increase.
Right, not my active income increase.
So when did you quit?
It was a couple of years ago.
So like 2022?
22, 23, right?
So couple of years.
Right.
But your stock portfolio, you literally doubled, like your net worth doubled in just 1 year.
Exactly, right, yeah.
Do you think it's because you strategically positioned yourself from the job that has no connection to what you're passionate about? Because the way you're sounding, you're so much deep into this subject.
Right. So I think job, I think, like a lot of people say education is not worth it. I think it's 100% worth it. It's just that what you do outside of education or for your company's time, that matters more. Because you need to have, like when you're starting from zero, you need some money.
Yeah.
Right. There's no one gonna give you money. If someone comes to me for like, let's say I was doing insurance from 10 years ago, obviously it would work out one day. But at that time I'm struggling for the first few years. You have that extra drive for sure. But you're also like very, like you might be selling something to clients you don't even need to make your money. Right. In my case, in my 7 years or 8 years now almost, I've never sold anything to someone they did not want. I've never said someone buy this because I want you to buy this. I said, buy this because you want this. I'm giving you all the options. Here's everything. You tell me what you want. We'll do that. There's no money pressure from my side. I don't want to make money from you. I want you and me to be in relation for years.
And that comes from you having a secure position.
Right.
So having that job allowed you to build your side hustle.
Exactly.
Not only just the side hustle, also but the investments.
Exactly.
So, and your side hustle is so much correlated to your investment.
Exactly.
Almost like, we have the same story. When I was working IT, I was doing real estate investing, buying, rental properties, but for long term.
Right.
But, when I needed more active income, I started sales,
Right.
which is also real estate related.
Exactly, right.
And I see the same thing you did was like financial advising is also like pretty much your,
Exactly.
Analyzing a portfolio,
Right.
giving people the advice.
Right.
So the time you quit, how much approximately you're making actively? What metrics you saw to quit your job?
It was really an instant decision.
Oh, just with your gut
I
feeling?
was just tired. I was like, I cannot handle going to work anymore. It was just like I was spending like 10 hours. It was more for time than active income. I was spending 10 hours a day, 8 hours going to work, 1 hour to travel, 1 hour back, getting ready. By the time I'm home, I'm already tired, right? And then I'm serving clients after. So it was like an instant decision, like I'm done. I want to give them like 2-3 weeks notice. I am out of it, right? And that was not because I saw that, okay, I don't have it. I always had metrics. I always thought, okay, once I make my income, I'll quit the job. Then I always shifted the goalpost. Okay, next year, if I make this much, I'll leave the job. And then next year, I'm already making double the money than my
At that
but
time,
I'm
already.
already still not able to quit the job. It's like a drug, right? You
Yeah,
keep
yeah.
getting money. But my reason for not leaving the job was I was investing all of my
Active income, the side hustle income.
No, the actual job income.
Oh, even that one too.
So I was spending all my job income and part of my business income because my wife was also working. So running the house with her income and then part of my insurance income, and then my job income was all investing.
Damn, so you're saving every freaking penny.
Yeah, from job.
Your wife never said, "Screw you! I don't want this
No, there's a-
greedy or what do you call that? The penny pincher personality."
No, there's she's just like we both have the same personality, right? We both agree on. We don't have to like argue about anything. Like we both know what we need to spend on. So we both came from similar family struggles. So in the end, we both have very similar. I guess when we want to buy something, we both already know what to buy.
So you picked, just
Right.
like your stock companies, you picked a good
Just like
partner.
I get lucky with people being around me, right?
Or maybe you picked a good partner, just like your stock companies.
Right, exactly. But then everything I buy, well, not everything, but like a lot of things I buy are on her name. So
So you made sure your partner aligned with your
Exactly right.
with your goals. So it's like you both have similar vision
Right.
for life.
yeah, and she does not know anything about investing though. But I manage everything for the investing side.
But like, is it like a pure luck, or you had some strategy? Like this person actually.
I think his luck is there too. I always, just like I was saying in the beginning, I always end up finding luck somehow, and then around good people all the time. And then they always help me.
But
So-
finding partner it's not a luck, bro. You didn't had any failures with the finding partner.
Oh yeah, lots. Yeah,
Lots.
exactly. Yeah,
So-
but then luckily something worked. It was not like it was arranged marriage, right? So it was just my parents found someone, and then it worked out.
And you were instantly connected, and you
Yeah.
saw that something that you both aligned.
Yeah, definitely. My education was a big thing for me. I wanted to make sure the person has education because I know that education is not like I need them to do a job. To me, if someone is educated, well educated with a degree, that's tough to get. That just shows they're disciplined. Like I do not want to be with someone who just went to any random degree. Must be something that was from a reputable college or university, and then something tough they have done. That just shows the commitment from their side.
That's an interesting way to look
Right.
at, like, you're looking at the person's commitment towards something.
Right, exactly. How their goals are, right? And then she actually was more educated than me. She had master's degree as well, so which I did not. So, but so in that sense, I think I got lucky than her.
Because the reason I bring up a partner discussion, because a lot of couple who are watching, they want to have a life, but
Yeah.
they say, "Oh, my spouse is not supporting with
Right.
my vision." What kind of or we could not save money. Do you have any advice for those couple, like how to align their goals for this financial freedom?
It's really common because I do help clients with investments too a lot. It's very common. A lot of times, one thing I see is like people don't even have joint accounts.
Don't even have joint
For a
account.
lot of them. So wife is keeping her own money in her account, husband's keeping his own money in his account, and then they just have a joint account to pay for the combined expenses, like a mortgage. And one, like few clients I know, they even have a weird system where the one person, like wife is making more than the husband. What they do is they still pay evenly, even though they are making different amounts.
One person is
one
more
person
paying.
making more, the other person is making less. They're still obligated to pay equal amounts. The person making less is still saving less, and then they don't know what they're doing with the other money. They have money sitting in their own accounts, and then they're just doing whatever they want to do. So sometimes I have one partner coming to me. I want to invest for my child in RESP, and then their other partner doesn't allow. I cannot do anything. I cannot tell one person's information to the other person, so I cannot really help them there. I think one thing I would say is definitely have a joint account, have a common goal that you want to. Look at your income. Try to save. There's a rule called 40, 30, 30. So it's 40, 30, 30 is like 100 in the end. So 40% of your income should be used for things we need in our life. We cannot survive without mortgage, rent. That's there. Food we have to eat. It's not like dining out, but like actual food we have to eat. Clothes we need to buy minimum, not brand, not luxury, right? So your minimum needs should be in 40%, right? It should not go above 40. If it's going above 40, then you're
Overspending.
right. 30 is the needs part. Next part is 30 is wants, that you want to buy something expensive. You want to go for restaurants, dinners, vacations, and also that all is in 30. It was in about 10 for me for the last few years. And then the last 30 is your investing and saving.
40-30 is goes to your lifestyle.
Right.
Another 30
Is
investing.
Investing is right.
So pure like savings and investing.
Yeah.
And someone who wants to do it even more faster, just do what he did, like, side hustle.
Yeah. Delayed gratitude. Just cut your needs or wants for a little bit, invest more, and then bring the wants back after.
So just an interesting question to you. To get where you are right now, was it your mindset or was it your strategies?
I think it's mindset. Anyone I talk to, whenever they call me, they need advice. If they want to share what I tell them, is you need to work on your mindset. If you control your mind, you can control everything around you. Right?
How do you control your mind?
Well, you train it actually.
How do you train?
In my case, it was already trained through family struggles and then not having money in the family. So it was trained in a way from that. And then the rest was easy for me, just discipline. Anything I do, make sure you research why you're buying something, same thing in stocks or anything else. But otherwise, read some books like we talked about before. Atomic Habits is a really, really good book.
Atomic Habits.
Right. So that's one of my favorite books. One Up on Wall Street, that's more for stocks and all. And then Rich Dad, Poor Dad is a good one. So read some books that build your habits in the long run. What Atomic Habits says is if you keep doing something, if you keep improving yourself 1% every day, it's going to compound a lot.
Right.
It's like 365% in a year.
Yeah.
Right. But if you don't do anything and you keep losing your mind 1% every day, you're going to be really worse off in the end of the year.
Yeah.
Right? So like small habits build like atomic bombs, right? So the small habits build your life over the long run. So
Makes sense.
work on those.
And something interesting example you gave that before we started the recording, that how habits can change. Like just you invest the equal amount of a coffee. Can you run us that example?
We'll try to run the numbers. So we had, I think we were saying that was one of the videos I had made in the very early on years. So I said, okay, how much is your coffee costing you? It was not to show that you should stop drinking coffee. People took it the wrong way. It got like over 1 million views.
It's okay. Let them take it wrong way, but let's show what that coffee can.
Yeah, that was one of the very first videos that took off for me. And I was like reading the comments, so really negative comments. I had to turn the comment section off. And people went to other videos to comment on those.
This guy is telling us not to buy the coffee.
I was like, every second, like 5,000 views, one more second. I was like,
you should not buy coffee. You just need to invest. And here is why.
So the reason why, okay, let's say we go to tomorrow's, buy like a medium level, $2 a coffee. So invest $2 a month, which is, or $2 a day, which is $60 a month for 30 years. And I get 15% return every, every year annual. So if you do that, the math shows $333,000 in 30 years. And you can see the green lines.
So you literally invested, contribution was 21,600.
Right.
But your total balance by 30 years is 333,000.
Exactly, right. And now imagine if you can invest $100, $200, $500, $1,000, whatever amount you can.
Can we do a quick math with like, let's say I want to contribute, like you said, the 30% rule. So I'm making $5,000.
Right.
5,000, 30% of it is what?
$1,500.
$1,500. Yeah, let's put simple numbers, a month.
So let's say do $1,500. You're looking at $8.3 million in 30 years.
8.3.
That's your retirement.
And what's my contribution?
You added $540K and rest is all interest.
Holy cow. So that's the power of compounding.
Right.
So probably this is why, Warren Buffett is one of the richest men. He started what?
At 14 is when he bought his very first company or stock, and he's been buying consistently since then. So time is in his favor.
So if you're if you're a teen, then you're lucky.
Exactly. Or invest for your children as well.
Yeah. Oh, so what do you mean by invest for children?
Well, make them invest or teach them how to teach them the value of investing. There's one really good thing I saw yesterday, actually, really, and I'm going to follow for my child.
Okay.
Is what the parents are doing is they said, okay, every book you read, I will give you $1.
I love that.
Every book you read, I'll give you $1. Make it $5, right?
Yeah.
One is nothing nowadays. So give them $5 a book. And the person said they've already read 100 plus books in the year.
Damn.
So that's how you build, like long-term habits and all. And then now it's up to you which books you want to give them. Give them the financial knowledge books.
Because the money can be made, but the habits is the one that's stopping people from actually seeing that returns.
Exactly. Right. So yeah, time is the main thing in compounding. Albert Einstein said compounding is the eighth wonder in the world, and he said those who understand it, they earn from it, and those who don't, they pay for it. We're paying the banks every month for mortgages.
True.
Right. Or other loans, debt, for example, someone has credit card debt, they're paying 25% compounding.
The other way around. It's a negative graph.
Exactly. So flip the graph, yeah.
Yeah.
How much you're paying in 20 years. So do the same math, whatever number comes up, that's how much you have paid.
Man, this is insane. Personally, even though I've been investing, but the power of compounding, looking at that calculator,
Right.
Probably just understanding it. I'll make sure to put the link in the description for the calculator that you shared.
Right.
Definitely play around with that, whatever it is. So basically what I'm understanding from you is, even if it's a coffee money,
Yep.
or if you can make it a lunch money, if you can make it a nice fancy dinner money,
Right.
but invest that. Start investing from today.
Yep.
Now you got a way
That's
to
all it is.
invest. There is like so many places.
You can simply invest in like a ETF, mutual fund, anything you want, right? And that's what I help with. I'll give you an example. One of my clients, he came to Canada as a student, very close person in the family actually, and I wanted to help him. I was not even doing well at that time. I was just like starting off in the stock markets and all. So I said, okay. He said, I have a job now. I'm working as a student. I can save some money every month. What should we do with that? And I was like, if you want the right advice, what I'm doing with my funds, I put into the most aggressive fund possible. And I'm getting around 18% return every year. And I was like, if you're okay with that, we can do the same thing. So he could only afford $50 a week, which is $200 a month approximately, right? So we put in $50 a week, and then we put into the most aggressive fund. And then 2022 came, and he said, okay, this is down 30%. What should we do? Should I stop it now? I'm like, no, this is the time you add more because the market is down. So he listened to it. He doubled it to $100 a week. And right now, I believe he has, within 5 years, he has around $30,000+ in his account.
Damn. So started with like literally $50.
Yeah, exactly.
So how much he would have contributed from that 30,000?
I think about 18,000, and rest is all investment returns.
So it's almost double.
Yeah, but then imagine doing it for 30 years and keep increasing every few years.
Because initially you don't see the returns. The compounding starts probably like 15 years after.
Yeah, and that's exactly how I started. In my case, I realized I saw these calculators early on. So I started throwing all my paychecks in there.
And this is exactly why you say the money that you're investing in stocks, you want to make sure that you're not touching.
Yeah.
So you're still actively making money.
Yep.
So which brings to me one final question. You're still doing active.
Yep.
So you're very active on social media, and also you're doing financial advising. And I see you started something with NASA.io.
Right. So what that one is, before I had a group of like almost 600 people, everyone told me like, what are you buying? What are you buying? Messaging me. I was like, I don't want to tell you what I'm buying. I want you to learn the process. Just learn why I'm buying, and then make up your own decision. I do not want to recommend anyone anything. It's, it's a risky game. I don't want to be the one responsible in the end for someone's losses. I would feel bad. Just like I watched someone on YouTube and I bought it. I still don't blame them. It was my mistake, right? But then if I tell someone that buy this one, they buy it and then they'll lose money, they'll blame me. I don't want that to happen. So I started a group. I was like, okay, I'll just start posting on Instagram what I buy and sell, why I buy it here and there. And almost 600 people had joined the group, but it's all free. And then I was like, well, why am I doing it all for free? Right? I'm spending so much time.
How can I monetize this?
Exactly, right. So I was like spending too much time on it. I was even weekends, family time. I'm just typing. Someone's messaging in the group. I'm typing, replying back. So I changed it to a free group. A lot of people didn't like it, but I was like, if I have two options. Either I stop doing it to give more time to the family, or I keep doing it, but I charge you a little bit for it. Yeah, it's like $15 a month or $20 a month.
Okay, so a small subscription base,
right? But what I offer there is a weekly webinar, a monthly webinar. At least once a month, I do a 1 hour, 1.5 hour session. Anyone can join from within the community. Whatever questions they have, they ask. And then usually I pick a topic by taking a vote from all the members, what topic they like. And we have one coming up actually next Saturday. which is how I built my whole portfolio. So I'll go over the whole process from scratch, how I started doing
So
it.
you're pretty much like mentoring them.
Hopefully. Yeah,
For
that's
what?
yeah.
$20.
Exactly.
If you cannot invest in yourself $20, I was telling you just before, right? Like, I wanted to learn AI so badly and I was lost. I was searching YouTube here and there. Like, there's so much stuff to learn. And I found a guy who has a deep, in-depth course.
Right.
And it is $10,000.
Yeah.
And guess what I did? I went and bought it because I wanted to commit myself to something to learn.
Right.
Because free, you can only do so much.
And what you will get out of that 10,000 is going to be way more valuable than what you're paying now.
I can already see, like, it will increase my team's productivity.
Yeah.
Even if I get one extra sale in 6 months,
That's being
that's already we got the 100x on.
Exactly.
So let's go get into this game.
Yeah.
90-12.
Okay.
What I want you to do is give our audience who is completely zero knowledge about investing. Let's assume that they're, a couple
Right.
making $6,000 together, and they want to start to see results in 12 months.
Okay.
In stocks investing. 90 days plan I want you to give to them.
Oh boy. Okay. I've never done something like this before though. So first thing before they even start investing, I want them to have at least 6 months of expenses on the side. That's like minus 90 days before they even get to the zero.
Okay.
Right. So they have to make sure they have at least 6 months of expenses in case they lose the job. They don't have any savings elsewhere. They don't want to pull the money from the stock market. If they can go above and beyond, like I do, I always keep at least 1 to maybe even 2 years of expenses. Because I don't know if let's say I'm on a vacation. And then all of a sudden stock market goes down. I'm already not making any money. And then in our business, what we have is a chargeback.
Yeah.
If I sell an insurance today, I get all the commission right away. But what if the person cancels the insurance tomorrow? The company will say, give us the commission back now.
Oh, you have to pay that back?
Yeah.
Oh, shit.
So in our business, it's a 2-year period where if the policy is canceled, we have to give the money back. If it's canceled after 1 year, 50%. I love this thing because it keeps the bad competition out.
Good. I never knew that.
So it's only our
Okay.
business in Canada, which is
Okay.
like that. A lot of people end up going into debt because they cannot pay back right away. So if you spend so I have to be in the habit of keeping enough money on the side.
Okay. So before you start the 90 days plan, have 6 months of your
Expenses, minimum.
expenses saved.
Yeah.
Okay.
Now, if you can, read the books I mentioned, One Up on Wall Street, and then that will give you a lot of starting foundation. Start investing slowly. Once you research a stock, don't buy all right away. A lot of times when you buy a stock, it starts to go down. It usually happens.
Yeah.
So don't put all your money into that stock right away. Have a plan to buy some today. Wait for it. If it goes up, it's okay. If it goes down, buy more. Keep buying more. So I usually love if a stock keeps going down. Right now, my biggest position that I have, I've been buying it for the last 3 months. It was down about 30% as of last week. Now it's down about 20%. I'm still buying. I'm still not done buying. Usually I buy like over a period of a year sometimes. So keep buying it slowly. And then have conviction, right? So you have to build conviction. If you don't build conviction, when a bad time comes, you will lose your mind. You'll be yelling at someone randomly in the parking lot or in the cars.
So when you mean by conviction, like you have to have a clarity on what you're doing.
And why you're so into this company, right? Then you will not feel bad.
So you're confident about what you're doing, where you're putting your money.
Yeah. It's easy to be confident in the green market, in a market when everything is going up. You're very confident, but when the market is down, that's when the real conviction comes into play. So there's 2 types of long investors. One is long investors because they want to be long investors, like myself. The other ones are they become long investors because the market has gone down. They cannot sell now. So you don't want to be the other one.
Yeah.
Right.
Makes sense.
And I would say 12 months is a very short amount of time sometimes to see a stock start performing. Right. So I usually look for stocks that have gone down and then try to see why it's down, why the market might be wrong on it. And even the market is going up a lot for the last 3 years, you will still find a lot of stocks that are down. I'm not saying buy these. I have these on my radar. One is Duolingo. It's down about 50% or 60% from all-time highs. I may not buy this one though. Then there's other companies like Hims and Hers is also down about 20%, 30%. So one more company, I think Figma is down. Then there's FI stock that's also down 40%. So you will always find stocks that go down. But it's not like buy every stock that's going down. You have to understand why it's down and then why the market is wrong in this one coming back up.
So what you're suggesting is first pick the books,
Yes.
keep your savings aside, and now start understanding which companies you want to buy,
Right.
and buy
Slowly.
little by little.
Yep. And the last one, don't put all your money into one stock.
So what kind of percentages you would suggest, like, high risk, low risk, medium?
So there's two strategies people follow. So some people are very high risk, and they do is they only have like 4 or 5 stocks in the whole portfolio. So they go all in into 4 or 5. But those are the people who have the highest conviction in those. They have deeply researched the company. I try to keep myself to a max of 10 companies.
Okay.
And right now I'm at 14. So it's the reason for 10 to 12 is it becomes too much for me to listen to all the earnings calls, keep up with all of them. Right now I think I have 14. When I start cutting companies down, I bring it down to 10. It's more manageable. So percent wise, I usually distribute equal amounts into all of them. And then over time, they have become bigger. Right. Some of the, like my biggest position right now with market value is around 22%. It was not 22% when I put money in. I only put in 4% of my money into that. But it became so big that now whole portfolio 22% is in one stock.
It grew.
Right. And then also have funds as part of your portfolio, like I mentioned myself, right?
Like funds, you mean just the cash?
No, sorry, I mean like the mutual funds,
mutual
ETFs,
funds.
or
Okay.
those sort of funds. They will be your peace of mind when bad times come. And also if we are wrong, let's say I have a big portfolio. What if this whole goes down to zero one day? I still have my retirement fund, which is almost about $425,000 right now.
Which is...
It's in a mutual fund which people cannot buy right now. It's closed for new investors. It's called the FTGRX, Fidelity Growth Fund. Grows around 15% annually. And if I do the math with you again, so if I retire at 55 or 60, let's say 65, 30 years from now, that 450K becomes almost $26 million on its own without doing anything.
If you don't do anything.
No, I don't need to study anything.
And usually those don't swing too much.
Max I've seen is minus 30.
Minus 30.
That's like a high risk one. It's very high risk. Then the most I've seen is plus 60 in a year. But that's a very high risk one. You can also do a medium risk one. Let's say you want to do a medium risk one.
So within the mutual funds also medium, high risk.
There's like low, medium, high, all of them. Yeah. So if you want to do a medium one, which will be 10% approximately a year, let's say I switch it to that one. Even then the 400K becomes almost $8 million. Right. So my retirement is from that one. I don't want to ruin that.
I love the strategy, and thank you so much for that. And we have one last thing.
Yep.
We always have a question left from the last guest.
Okay.
And also we want you to leave a question for the next guest. So the last guest left a question. When was the last time you cried, if you ever cried?
It would be obviously this year, a few months ago, but I don't want to give the reason.
Okay.
I'll leave it at that. But yeah, the reason will be personal, but it was not anything to do with finance. I've never cried because my stocks went down. So that's one thing. So obviously some other issues.
Perfect.
Right.
And what's the question you want to ask the next guest?
So my question would be this one. So if everyone is coming out here with smalling off small and then becoming big one day, there's one thing they all have done is gained new skills over time. So what I do myself is gain one new skill every year. So my question to that person would be, what's the skill they're going to learn in 2026? So I can pick up on that one myself too.
I never went into this deep discussions on the stocks, and honestly, I really feel, those who are watching, because, it's growing and AI throwing answers at us, and people are lost with this kind of discussions, right? And that's exactly why I wanted someone who walked the talk, who is doing it every day and who is, in the crunches. And I thoroughly enjoyed, and a lot of value here for me personally, because I am very baby in the stock side. So thank you so much.
Awesome.
It's honor, and hope you guys enjoyed it too. Make sure go follow his Instagram if you speak Punjabi. If you don't, for NASA, can they join if so it's all in English?
Right. Just my content is Punjabi, but the messages are all in English, and I'll be bringing content in English as well going forward. So
perfect. So I'll put the link for his community, where you can join, like small investment where you can learn a lot, because the way you're telling me, that's like a no-brainer. All his info is in the description. And with that, thank you so much.
Yeah, thank you.
See you on the next one.